Katsuna, stay with us. And very quickly, we'll take you through comparative analysis of brewing companies. We have four of them. We have the Nigeria Brewery, we have Guinness, we have International Brewery, and we also have Champion. So let's start with Nigeria Brewery. In 2022. We have 393.44 billion naira. And then in 2021, 309.281 billion naira. The percentage change being 27.21. And then for Guinness, 52.85 million naira in 2022. And then in 2021, 47.46 billion naira, the percentage change being 11.33. And then checking International Brewery, 160.43 billion naira in 2022. And in 2021, 128.396 billion naira. The percentage change, 24.95. For Champion, 9.499 billion naira in 2022. And in 2021, 7.082 billion naira. The percentage change, 34.12. That's what we have here. So we're looking at comparative analysis. Generally, let's start with you. What do you think about the turnover for these companies? And then, okay, finally, let me just take Champion. We have Champion, 9.49 billion naira in 2022, and in 2021 we have 7.082 billion naira. The percentage change being 34.12.
Looking at the top line of this company, being a consumer sector, I would say this is a good number in terms of top line. And don't forget that when a company top line is looking up, it's a sign that this company is either they're introducing new product or they're eating to others market, and that means they're expanding their seed. For me, it's a good one for the brewery company. It's a good one for it being third quarter result. That means on the strength of this, investors in this company should not panic, because if a company is growing their top line, in between the top line and the PAT, yes, there might be some adjustment, but when the top line is up, it's a sign that the company is expanding its sales, and that means that sales will support your bottom line, which is the PAT. For me, it's a good start for this company, or a good one for third quarter. That means in this season, I said this season is for the consumer goods, all the consumer goods this season, because this last quarter activities will be on terms of consumption. For that, it's going to be a plus for them at the end of the day too. For me, this is a good one for those companies.
All right, Mokhtar, let's have your thought.
I don't know if you've gotten the breaking news that Nigerian Brewery also is proposing a bonus share for shareholders of for every 4 share you have 1 bonus share. I just got that news just now. So
yeah, go ahead, we can hear you.
Okay. So when you look at those numbers, I think the one that stand out most for now still remain the Nigerian Brewery, like Ambrose said, but you look at the drop in profit in the first quarter. I mean, comparable to the first quarter, and the second quarter drop in profit of about 4 billion. And then, but when you look at comparative analysis, you see that there's been an increase, like you put about 79 point something %. So for me, and the price is still very good, and they're paying 30 million of 40 cover. And I'm just, as I just said, mentioned now, we may have a bonus share for every 1 bonus for every 4 shares that you own in Nigerian Brewery. So when you look at that, it's a good share to for me. It's the best in that sector. When you look at the PE ratio, also it's still better than Guinness and the others. So, but again, it's investment perception. If you're an investor that is looking for dividend payout, then you will not be so much thinking of Nigerian Brewery. You will also be thinking of Guinness because of the type of dividend they pay comparable to Nigerian Brewery. Yeah. But then again, you have to look at the price also. By the time you put those two comparative analysis, you still realize that Nigerian Brewery is cheaper. If you look at Champion Brewery, Nigerian investors are excited in terms of dividend payout, and capital appreciation has not been so good in Champion. There was a time that it gained so much, and the liquidity in that share is not as strong. For International Brewery, it came with a lot of hype, and a lot of investors thought this is going to be a new darling, especially because of the price ratio comparable to Guinness and Nigerian Brewery. So investors were looking at that as the new kid in the block that they can use to improve, especially in capital appreciation. But unfortunately, it has not panned out like that. It went to an all-time high, about 20-something naira, and has been on a decline ever since then. So you do a comparable analysis. If somebody that you're looking for good dividend payout, and then Guinness Nigerian PLC will be it. If you're looking for capital appreciation and dividend payout and recently bonus, you go for Nigerian Brewing. But if you are looking for volatility, in terms of penny stock volatility, I think you will go for Champion and International Brewing. Just depend on which side you want to be.
Absolutely. I think I like that analysis where, you considered, the investors' appetite, and, I think that's a good one.
Yeah, just to add to what he said, for Nigeria Brewery that has about almost a 7.something billion ordinary share, additional 144 again, for every 4, 1 bonus. This is like also to dilute the earnings of Nigeria Brewery. Yes, this inflation environment, we know that their products kind of whether that's good or bad, people want to drink another stuff. But I will tell you, the more you increase your share in issue, the more your earnings also start looking out. Unless you're able to double your earnings, to the percentage or the proportion of the bonus you are giving. 144 for me is also a huge one. For every 4 they give you one. That is about almost 25%. If I want to take, quickly look at it, that means the Nigeria has to also double their performance, so that if not in the coming year, this might also, because remember, Nigeria has stood as high as 120 naira in this market when they declare 1-for-1 bonus. Since then, that price has not been in place for them to test it again after that, because of what they enlarged share. Now they are doing more again, with also when you give you option of taking the dividend or you take bonus, this also continue to expand what the share in issue for this company. I think investors should also rethink, but I'm not recommending whether they should buy or not, but just to give them perspective and direction.
Thanks for your perspective. Now we look at the profit after tax. We still have the 4 companies that we are considering at this point in time. So for profit after tax, we have Nigeria Brewery 2022 14.75 billion naira, and then in 2021 8.21 billion naira. The percentage change 79.58. For Guinness, 2.75 billion naira, and then 2021 4.04 billion naira. The percentage change there being in the negative, minus 32.03. For International Brewery, minus 2.81 billion naira in 2022, and then minus 13.52 billion naira in 2021. The percentage change, minus 79.22. Let's take a look at Champion now. 1.26 billion naira in 2022 and 635.339 million naira in 2021. That is 98.26%. I'd like to start with you again, Ambrose.
I told you earlier that after the top line, in between the top line and the bottom is your cost. Cost of say, your tax and all cost of operation and all those stuff. For me, looking at these numbers, they are also pretty good to show you that where the companies were before. Guinness, this their Q1 number was simple. Guinness has the June as well year end. But just in their first quarter, you can see that there's a decline in their profit after tax from about 4-something billion to 2.7 billion. Shows that where that also the price falling, we are not surprised that the price, because people have to look at, the nearest one that will give me dividend will be for the dividend for the December year end, which is Nigeria Brewery, International Brewing, and and the Champion. And this that Champion and International Brewery are not consistent in their dividend payment, because International Brewery has been in a red account, but they're not coming and trying to reduce their rate. For Champion, they're not consistent, but for Nigeria Brewery, they know that as my colleague have just said, they are consistent in dividend and other stuff. Good for me. It's a good number. Like I said earlier, this season is for consumer goods, so all the consumer goods will enjoy this last quarter of the year, and they might also be part of them.
All right. Okay, Mukhtar, very quickly, I'd like you to share your perspective.
Yeah, I think Ambrose have hit the nail on the head again. Like I said, if you look at those profit after tax numbers, you won't but stick to Nigerian Brewery or stick to Champion. But Champion, like I said, is for the volatility stuff. So I wouldn't want to go there. I will look for capital appreciation and dividend payout. But again, like he said, his introduction, we need to guide against what happened some years ago with Nigerian Brew when they came with 1-for-1. Now they're with 1-for-4. We've never had bonus for a very long time in any share in the Nigerian Stock Exchange. And that would come as a good news to investors, especially in this period. But like Ambrose also said, this is Nigerian brewery season, Guinness season, all the brewery sector, this is their season, because when we're looking at celebration, also we are looking at an electoral year also. So there's a lot of their products are one of those tools of investors. I think the challenge with Nigerian breweries, they just need to improve their distribution outlet. And again, that comes with a challenge, especially when they have to distribute in the far north. They are not allowed to do that. Also, both Nigerian brewery, Guinness, and others. So I remember again, Nigeria Brewery is doing something outside the box, also trying to build energy-friendly type of power supply also, and that also could reduce their expenditure. So I still believe that Nigerian Brewery, as it stands today, it looks cheaper than Guinness, but again, that's for investors' perception. So for me, I think he has hit the nail on the head. Depending on which fight you want to be. If I'm an investor, I will do my comparative analysis and say, okay, as it stands now, Nigerian Brewery is selling for about 37 naira at the close of market today, and comparable to Guinness at the close of market today was 60. So that means you can get 1 point something unit of Guinness. I mean, Nigerian brewery comparable to Guinness. Then you come to the dividend payout. You realize that your 1 point, looking at the previous result, you realize that Nigerian Guinness will pay you better than Nigerian brewery. So you really need to do your calculation, like Ambrose say. You need to be financially intelligent to know what's your goal, where are you going, the capital appreciation or dividend payout. If you are looking at any of those things there, you begin to make up your mind. But for the other two stocks, I don't think they have met investors' expectation thus far, whether in dividend payout or in capital appreciation, because they seem to go high and then come very, very low.
All right. Well, very quickly now, let's move to earnings per share. I wish we could have extended conversation and ask you questions back and forth, but of course, we're pressed for time. So very quickly, let's move on to the earnings per share. For the earnings per share, Nigeria Brewery, we had 1 naira. We had 1 naira 79 kobo. Beg your pardon. I think I will just have to cross-check what I have here. So for earnings per share, Nigeria Brewery 1 naira 79 kobo, and then for Guinness 1 naira 25 kobo. For International Brewery minus 10 kobo. For Champion 16 kobo. And very quickly, I'd like to take this with the price to earnings ratio, so we can just wrap up as soon as possible. For price to earnings ratio, Nigeria Brewery 23.32, and then for Guinness 66.06. For International Brewery minus 43.98, and for Champion 20.51. And as always, I like to start with you, but let me start with Mukhtar now. Okay, so Mukhtar, talk to us about this earnings per share, price to earnings ratio. Pick any of the two and talk to us about it.
When you look for earnings per share, you still think that Nigerian Brewery is still doing very well. When you go to PE ratio, then you realize that Nigerian Brewery also is there, but in that space, I think Champion Brewery is a little bit better in PE ratio. But like I said again, it depends on what you are looking for. The other thing people don't know about Guinness is that Guinness is terms of liquidity. They have so much liquidity, and sometimes they go into their reserve and they sometimes pay all their earning per share to their investors, comparable to others that sometimes keep some of their earnings to grow the business. So for me, I'm still staying with Nigerian Brewery in this space also, because of 1 naira 79 kobo. But again, when you look at Guinness, the earning per share this second quarter or third quarter is not very exciting. But then they always have cash reserve, so they might just use that argument to remember that they started 2 years ago. They paid 1 naira, and now they have moved. They raised the bar by paying 7 naira 14 kobo in their last payment. So it's a stock that, like I said, if you are somebody that believes so much in dividend payout, that's a stock to go.
All right, thank you so much. So quickly, we'll look at our book value per share. For book value per share, a Nigerian brewery, 22 naira 43 kobo. Guinness, 36 naira 18 kobo. For international brewery, 5 naira 6 kobo. For Champion, 1 naira 34 kobo. I'll take that with the profit margin. And Ambrose, be on standby. You're going to talk to us about this. So, beg your pardon. For Nigeria brewery profit margin, 3.75. For Guinness, 5.20. For international brewery, minus 1.75. For Champion, 13.26. This particular one, I think I just talked about the profit margin now. What happened to this profit margin? 3, 5, minus 1, except for Champion.
Well, actually, if you look at the profit margin, it's just a reflection of the the inflation environment we are. You can look at how robust the top line, but look at the bottom line. You can see that in between, you can see that costs have eating up some good portion of what they made in their sales. That is why we are seeing that profit margin is steep. But it tells you that the cost of operation is also eating up. But good that they are still having a good earning that will support their payouts. But I'll tell you, cost of operation are reflecting inflation and also exchange rate, and all those is eating up this company's activity. Because if a company that grows its top line by almost 35% up, at the end of the day, we are seeing that their profit margin is less than 10%. It tells you that cost is really high.
So what do we do really? Is this research, you're talking about economic research, is the research going to address this issue? Let us understand.
Research will address, because also if you look at most of them have done backward,
all these issues.
Yeah, they have done backward integration. If you look at what Nigeria Bill has done, I think they have set up some farm here to maize for them to kind of reduce their importation, which is good for them. But going to the forward, but like you just said, we need a policy that will encourage this sector's activities. Backward integration is one of them that have supported them, but we need more, because exchange rate in the market is not helping, and you can't plan because it is volatile. You can wake up in the morning, say it's 700 or 900, next they come down to 500 or 600. You can't plan. And also, how many of them are getting access to CBN rate at the high window? You need to understand, because if you're a businessman, the one they give you for the high window, you don't hold it, and also go and source for that, because you want to bring what they give you for the high window will not be enough for you to bring what you want to come into the economy. For me, I think we should address that issue. And also, power is another problem. You can see that energy has been another cause that kind of push up a lot of things. This will to go from almost between 700 and 800 in Nigeria. If you are in any space, even though the electricity hike have been for like more than 4 times in the last 2 years, you can see these are not helping matter. But I believe that most companies are able to manage this. You can see that some having good profit margin, but for my company, they can't run away with it. That is why we are seeing that in this company. But for that financial sector, they know how to do it. But for my company, you can't run away from cost, because you need to use cost to get you what you need because of what your production cycle. Absolutely.
Well, I think we have to wrap up here. We can't take the return on equity. So very quickly, let's have your take from everything we've talked about today, Mukhtar. What's your take? What's your advice for investors? Very quickly, in less than 1 minute.
Investors should begin to look at the stock market to hedge against inflation, and they should be involved in value investment. Value investment is that you invest in companies that have fundamentals, and when the economy will start the recovery processes, those are the companies that first of all begin to gain from those recovery processes. So value investment is key at this time.
All right, thank you so much, Mukhtar. Ambrose.
For investors, I would say that there are some individual stock and sector that always read a rebound. Yes, we have seen market coming down, but now looking to see a rebound. That means target those sectors and individual stocks that will read a rebound. But rebound is already on that way.
All right, thank you so much.
Thanks. Yeah.
Well, I've been speaking with 2 perfect gentlemen, Ambrose Amodio, the Chief Research Officer, Investigator Consulting, and Mukhtar Mohammed, the CEO of Finance with Mukhtar. And it's been a pleasure having you join us today. My name is Perpetua Fasami Peter. Do enjoy the rest of the day and have a wonderful weekend. Bye for now.